Welcome to Small Cap Nation. I'm Jane King at the New York Stock Exchange. With me today, Michael Kramer, the founder and portfolio manager at Mott Capital Management. Welcome, Michael.
Thank you for having me.
So tell me about Mott Capital.
So Mott Capital is a long-term thematic growth investor. What we do is look for themes and trends in life and society, and we try to think about investments that meet those themes and trends. And we take a long-term approach to investing as opposed to short-term trading. I was a trader for many years, and I noticed the market had become very short-term oriented.
Oh, absolutely, yeah.
And I thought the best way to really offset the volatility in short-term market movements is to be a long-term investor and really understand the stories and concepts you're invested in.
Sure, and that's really the way to build wealth in the long term, is hold something for a long time.
Sure, the idea is to find quality companies that make an interesting product or that invested in some sort of theme or trend and to really kind of ride that growth, because at the end of the day, it's very difficult to time the market.
Sure. Now, you've been investing for a long time. You've even financed your college education with stocks, right?
Right. So I was fortunate enough that I started college in 1997, which of course was the lead up into the tech boom. But I did invest. I found that investing was something I was really passionate about, and so what I did was instead of getting like a part-time job, I started investing in stocks, and it was a lot of fun. I obviously did well for myself during the time, and it's funny because I started with a small amount that my father had given me, and by the time I was done with school after 4 years, I paid for all my tuition, all my expenses, and I had almost the same amount of money left.
Wow. Where did you go to school?
So I went to school at CW Post, Long Island.
Okay.
And when I was there, my colleague now, my partner, Minaj Dalvi, was actually my professor and taught me in finance.
So that was a good indicator you were heading into the right field, that you were able to pay for your college education. What changes have you seen in investing since then? I mean, we're here at the New York Stock Exchange. Things have changed so much here, let alone in investing since the late 90s.
So I think it's interesting because the world, I think people try to still think about the U.S. as an island unto itself. In terms of economy, and people talk about Fed rate policy, but really in reality, we're in a global economy now. Everything is really connected. Much more so than I think people really want to accept, right? So like in the late 90s, early 2000s, if something was going on, let's say in Hong Kong or China, it wouldn't necessarily affect what was going on here, so to speak. I mean, you had the, like the Asian contagion currency crisis in the late 90s, and you had the SARS outbreak. But those were kind of, we had a little bit of it here, but it wasn't to the extent that was going on there. Now today, like when you think about what happened in 2010 with the Eurozone and everything going on there with the fear of contagion and sovereign debt problems, there was a lot of turbulence and turmoil here. And the effects of 2008 from our standpoint were also affected throughout the world. So the world has really become one continuous global trading.
Yeah, I remember, things have changed. A couple of things, because I'm a financial reporter too, when we're talking about Cyprus banks, and that's impacting Wall Street.
Right.
Things have changed. And then I also realized I had to learn when China releases its economic reports, because that impacts how we trade overnight and open. So yeah, it's like 24 hours that you have to really pay attention to this stuff.
Exactly. And I think, but to some extent, I think sometimes it's overblown as well, right? We take it a little bit too far. You see China going down and people worry about China slowing, but you have to think about China relatively, right? So the US has about 18 trillion in GDP. Europe has about 18 trillion in GDP. So we're talking like 35 to 40 trillion in global GDP, which is about half of the world GDP. China is 10 trillion, right? So if China slows from, let's say, 7% growth to 3% growth, that's a $400 billion loss in growth, which is like a 0.5% of total GDP growth. So in reality, the fears and everything that happened here in January just seemed completely overblown.
Yeah, I mean, it's good to keep that in mind when you're seeing what we saw the first few days of this year.
Exactly.
Because it was hard. My kids, their college money's in Chinese stocks, and it was a tough month. So.
Sure.
So Acadia Pharmaceuticals is one of the companies that you have been invested in and are still. So tell me about that company. What do you like about it?
So what I like about Acadia is they're bringing a whole new way of treating patients with psychosis to the table. They're currently in the process of getting an approval, hopefully by May 1st we'll find out, for Nuplazid, which is a new molecule. It's basically, you have SSRIs, which are selective serotonin reuptake inhibitors. This is a select serotonin inverse agonist. It specifically targets one receptor in the brain, and it does it by shutting it off, essentially. So the way psychosis is currently treated for Parkinson's disease is with an atypical antipsychotic. And with that comes a lot of side effects and a lot of other things that are unfavorable to Parkinson patients. So what Nuplazid does is it treats the psychosis without worsening the motor functions of the patient. So it's a really interesting way to treat psychosis, not in Parkinson's, and also there have been indications they're completing a trial in Alzheimer's disease psychosis, and right now they're doing a lifetime study of Nuplazid, and they're going to be hopefully coming out with other indications they're going to try to target as well.
If they could do something for Alzheimer's, that would be absolutely huge.
Sure.
So what are some of your other favorite picks?
So other stocks I like a lot are companies like Alkermes, which is also in a similar space. They work on drugs for depression and schizophrenia and Alzheimer's agitation. Other companies I love are companies like Verizon and Vodafone, because I believe that data consumption will really be something that drives these companies forward into the future. Other stocks that I like are things such as Tesla.
Okay.
Tesla is really interesting, not because they're a solar play, but because they're a disruptor to the whole automotive industry. They're changing the whole model and process in which people buy cars. They're not going to dealers, they go directly to Tesla. You don't have to go to a gas station. You get home at night, you plug the car in, you're done. People worry about things like range, but I mean, in reality, people aren't driving 200-300 miles a day anyway. And if they are, Tesla kind of has that that charger along the way.
Yeah. Now, you and I have something in common in that we both look at our children and try to pick their brains for macro trends.
Right.
I ask my kids, they get on their iPads and then they also watch the Disney Channel or whatever. They're 6 and 8. And I asked them once, which would you rather give up, TV or iPad? And my daughter's like, iPad.
Right.
And my son is like, TV, no iPad, no TV, no iPad. So I was trying to figure out where all this is going.
Right.
And I guess we're just entering a multi-screen world, and you do the same thing with your daughters, right?
Right. So I have a 5-year-old and a 2-year-old. And one day I was home with my daughter, who's now 5, and she was sick, and she was watching Cinderella. And after watching it, I called my grandmother, who was at the time 100. She just passed away recently. And they were able to have a conversation about Cinderella, right? So this is a woman who's 100 having a conversation with someone that's 5 about a movie that's over 60 years old. So that in turn gave me the idea for Disney, the idea that they had this long-term, brand that lasts generations, right? And then the other thing I've really noticed about my children is they're in what I'm calling this on-demand generation. They're living in a world where they get content at their demand whenever they want it, without interruption, right? No commercials, no ads. They don't like ads. They can't stand ads. In fact, if there's an ad, they'll actually switch off of it. So for to play things like that, you have to think about who's delivering the data, right? How are they getting this content? Verizon, for example, is a perfect example. A reason I like Verizon is because they control the content coming in through the pipe, through Fios, and they control the data and through the mobile applications. So really, when you think about it, I mean, Verizon's an excellent play on that on-demand generation, these kids growing up around this 2010 timeline that I'm marking as the point in time.
Is when things switched.
Yeah.
Okay, so well, thank you so much, Michael Kramer of Mott Capital, for joining us today and sharing your generous research that you've done so generously with us. And thank you as well for joining us on Small Cap Nation. To see more interviews about investing or companies doing interesting things, you can go to smallcapnation.com.